Let's talk about the profit first method. So if you are a business owner and you've ever felt like, okay, I'm making some money, but it seems like all of my expenses are eating all that money up, and by the end of the month you're like, girl, sis, bruh, where did this money go? I don't know about you, like I have had the experience where at the end of the year I do my taxes and my accountant tells me, oh, you made XYZ amount of money last year, and I'm like, how? Where did it go? Have you ever had that experience as a business owner? If you have, the profit first method might be just what you need. So let's get into it. Hi, my name is Nana, and here we talk about all things passive income, entrepreneurship, personal finance, and of course, real estate. And if you are interested in learning my method to real estate investing, which is through Section 8, go ahead and check out my free Section 8 training in the description box below. When it comes to profit first, let's first talk about what is this method. So with the profit first method, you are essentially putting your profit first. It's basically a business accounting method that prioritizes profit before you pay any expenses. So you're going to set aside a percentage that you decide on for profit specifically before you pay any bills, before you pay any expenses. And the beauty of this is that you are starting to prioritize profit in your business. So the first thing about this method is that you are actually reversing the traditional accounting method, which is where you take your revenue minus your expenses and that equals your profit, right? That's what we've all been taught. That's what we all think. And that's what most of us do. But with the profit first method, you actually kind of flip that on its head, and it goes revenue minus profit equals expenses. I'll say that again, revenue minus profit equals what you can actually spend on your expenses. So by setting aside profit in the beginning, you force yourself to prioritize profit within your business and more efficiently manage your expenses. This means that, hey, if you make $100 in revenue and you've decided to set aside 10%, that's going to be $10 of profit. Now you only have $90 to use for your expenses. So it gives you almost like a forced budget to manage your expenses instead of going all willy-nilly and just using your entire $100 on expenses. Next thing you know, you don't have any profits left. So part 2 is going to be, you want to divide your income and your bank accounts into 5 separate accounts. And that's going to be for profit, tax, owner's pay, operating expenses, and debt. So this method allows you to prioritize and allocate your money in a way that is going to benefit your business and avoid overspending or neglecting specific and important financial obligations like your taxes that you're going to owe every single year. So you're going to break this down into percentages for each one of these business bank accounts. And if having 5 bank accounts sounds crazy to you and overwhelming, I like to use a business bank called Relay that makes this really easy. So it's not like you're opening like 5 Bank of America bank accounts that you got to manage and it's really crazy. Relay Financial makes it very simple for you to just quickly open up these separate bank accounts, and they actually are partnered with Profit First and the author of the book, Mike Michalowicz. So they are truly aligned with the method. Now let's talk about how you break all of this down. So you're going to use what the author likes to call TAPs, which stand for target allocation percentages. So again, you're going to break these down into percent. So the money comes in and 5% is going to go to this account, 10% is going to go to that account, so on and so forth. So let's give an example. And I'm actually going to insert a little picture from Relay Bank on how the book recommends you allocate your percentages based on how much revenue your business makes every single year. Now, of course, you can adjust these percentages for your personal needs and what you know is important to you, but this is what the book recommends and is really helpful in getting started. So a great breakdown is, let's say your business makes around anywhere from $0 to $250,000 in revenue every single year. Your breakdown is going to be 5% going to profit, 50% going to owner's pay, 15% going to taxes, and then 30% going to your operating expenses. So your operating expense account is going to be where your actual bills are coming in. So any expenses that you use for the business, this is where that money is going to come from. And the nice thing about this is it keeps things separate. So you know that you're only spending on expenses out of this particular account, and all that other money that you've allocated is kind of protected from being accidentally used for a bill that maybe your business can't afford. It also forces you to be a lot more thoughtful about what things you're spending money on within your business. And again, you can adjust these percentages to meet your needs. So if you know that, hey, you also have a 9-to-5 job, you don't need 50% of this money coming in as owner's pay because you have supplemental income and you're trying to grow the business as much as possible, maybe you'll increase your operating expense account so you can spend more money on things like ads or whatever it is that you need for your business to grow more quickly. The next thing you want to do with this method is to pay yourself first. So with Profit First, this system really focuses on the importance of paying yourself as a business owner. A lot of times as business owners, we're so focused on growing our companies and what we're trying to do that we're not taking any money and setting it aside for ourselves. So with this method, you pick a percentage that you're going to pay yourself every time revenue comes in, and it is specifically allocated as owner's pay. So this pay is what you pay yourself on a regular basis, which whether it's every week, every 2 weeks, you can set up payroll if that's what you want to do, but you don't have to. You can also just do owner allocations that you send money to your personal account every week or every 2 weeks from your owner's pay account. And the way you determine how much your owner's pay is going to be really based on your needs. So again, the chart is saying 50%, but maybe you know you need a little less or a little bit more depending on the season that you're in. Just pick the percentage and stick with it so that you are also having a good work-life balance, right? Not all of your money is going back into the business. You're also paying yourself so that, that's what our businesses are for, right? We're growing these businesses for some sort of freedom. And so no matter how much you're making or how little you're making, you need to set aside some money to pay yourself as you continue to run your business. And then finally, you want to track your progress and make adjustments. So this is not necessarily a set it and forget it type of system. You want to review things on a regular basis, review your statements, review even your allocations to make sure they make sense. So if you find that, hey, you're not paying yourself enough, you can adjust that percentage after, say, a couple of weeks of using this method. Or maybe you find that, hey, I want to put more money into my operating expense account. You can adjust that. Whatever the case may be, you want to review your finances on a regular basis. And some people do add a debt account. So if one of your goals is to be paying off debt, you can add that as an account and allocate a percentage for that as well. So it's quite a flexible system. And I love just the whole mentality of it of paying yourself first, of taking actual profit, being realistic that you're going to owe taxes at the end of the year and putting some money aside for that. And then also managing your expenses in a more thoughtful way so that you're not overspending and you're being a lot more thoughtful and a lot more efficient about the expenses that you take on. Because I don't know if you've ever been there where you're like, oh, that sounds good for my business, I'll sign up, or oh, that sounds great. Next thing you're spending on things that you don't necessarily need to. You kind of forgot that you signed up for this subscription. This makes you way more focused on your expenses so that you're not basically wasting money. So check out the Profit First method. I will leave a link to the book by Mike Michalowicz in the description box below. And if you happen to be interested in starting a real estate business or getting into Section 8 real estate investing, if you're a landlord or a new investor who's looking to buy and hold rental property, make passive income, and get guaranteed rent, check out my free Section 8 investing training in the description box below. And if you found this video helpful, go ahead and check out this next video here, because when you pair it with what you just learned, you will be unstoppable, my friend. Thank you so much. Bye.